Good afternoon, ladies and gentlemen, and welcome to this week's trade review session and also live trading session. So as you will have seen, I placed a trade about maybe 15 minutes ago for the opening bell, but the market's popped up nicely. So I took 40 pips on that particular trade, and I'll look at another potential entry point as we're doing this session. So hopefully able to repeat the trade and repeat the profit, but we'll see how we go in the next 9-10 minutes or so as we approach the opening bell. Thankfully today it's going to be a better trade review and live trading session than it would have been about 5 or 6 hours ago when the markets were still heavily against me. As I've repeatedly mentioned a few times during the course of today, I did expect the market to push back up towards yesterday's closing levels. It was month end. There was no month end rally as you quite often see, especially when the month end and the quarter end combine. You tend to see a late push higher. Didn't happen yesterday. We saw a bit of a sell-off, and that sell-off has continued. As you will have noted from some of the trade messages this morning, I was up very early, concerned with the position that I was holding, and the Dow was trading as low as 33,480 overnight. We have been lower during the course of this morning's session, but I still believe that the market was overdone and that we would see a rally back up close to yesterday's closing levels. We've actually surpassed that. We're trading at 33,885, and it looks like a push towards 34,000 is back on the cards. I have one Dow position left open, and hopefully we get to a level where that can be closed out with either a small loss or some form of profit. One of the questions that I've been asked a few times during the course of this morning's session with people that I've been talking to is, why was I so adamant that the market would trade back up to these levels and surpass my expectations, to be honest with you. The reason being is the month-end movements are very rarely completely justified, number one. But you always tend to see an overreaction during the European trading zone as well, and the majority of the trade, albeit that the Nikkei 225, that the Hang Seng wasn't trading today, but albeit that the Nikkei 225 was off substantially earlier this morning, there is still a tendency to overreact during the European trading zone. Whichever way the market is moving, be that to the upside or to the downside, until the Americans start to hit their desk, and then we start to see some or more what I would call genuine trading in relation to the way that the Dow is moving. I think that's what we've seen today. We've pushed up towards 33.9. I think we probably hit 33.920 as a high during not too long ago, probably in the last hour. We're currently around 33.877. So, how do you see that on a screen? It's very difficult, virtually impossible, and you can look at all of the scanners, all of the technical charts that you would look to see. These sort of movements are things that you kind of get a little bit used to over the course of your trading career, and it's a pattern that I've seen many times. Doesn't mean that the pattern is always going to hold true, and that's what makes it a little bit more difficult for people to buy into the trade, makes it more of a ballsy trade, for want of a better word. But you do often see it, that over-exaggeration of a move during the European trading day. I've spoken about it a few times in the past. It was really pronounced today. We've rallied probably 500 points off of the low today, so it is a really pronounced movement, and I fully expect A bit of continuation after the US markets open. I do want to spend a lot of time talking about yesterday's trading day and where that got me to from a personal perspective. Share some of those thoughts and insights with you during the course of this session, and then if you do have any questions, I'll be glad to answer those either live during this session or post-event by email. And as always, I would encourage you to send your questions through, and I'm sure that there are many emanating out of the last couple of weeks. Last week obviously was a significant down week. If I looked at my trading up until about 12:30 yesterday afternoon, I was probably looking at 1,500 pips of a return this week, maybe a little bit less than that. If I looked at my trading at 3 o'clock this morning when I woke up to put a stop on a Dow trade, that looked as if it was going to push towards that stop level. I think we probably got within 40 pips of my stop level later on this morning. Then I was looking at a loss, and now after using that stop, raising my stop during the course of today's trading day, again a very aggressive ballsy move throughout the course of today. It slowly got better, and I am probably once again looking at a return somewhere in the 900 to 1100 pip range, depending on where the remainder of the trades go for this afternoon. And obviously I mentioned on many occasions that my trading was finished yesterday. When I make that statement today, I guarantee that my trading will be finished. The situation that I got myself in was unenviable. Luckily I'm through it. I've used another of my get out of jail free cards, but we'll explore that in a little bit more detail as we go through. We're probably just under 3 minutes, 2.5 minutes or so to the opening bell. Gold back up towards 1758, probably the start of my issues yesterday. Talk about that again in a little bit. The DAX is around 15,220. I think it has a bit of a movement to the upside. I was long yesterday, 15,308 I think it was, and got out of the market about these levels. So I think if the DAX receives affirmation or confirmation from the Dow that we've seen the back of this sell-off, I think the potential that is there for the DAX to go higher from here and possibly trade back up towards that 15,300 level. The Dow, it's going to be interesting to see how we open. It has been strong. The Dow or Dow futures have traded particularly strongly over the last couple of hours, and whether there is a continuation or not will be interesting. One thing that you can do, I am long Dow futures. You can short the Dow on the basis that worst case scenario, if it does continue to rally, all you've done is locked in your loss between the two trades that you put on. I don't really like doing that. Some people do similar sort of things to that and then try to trade out both sides of it. I really don't recommend that. So I'm going to continue with the long position as is at the moment and see where we go from here. I'm not going to trade prior to the bell. I've already done that. I traded at 33,836, sold at 33,876, so 40 pip profit. So I'm going to let the bell happen and then just see what the momentum is in that first couple of minutes. Are we going to see a few people, and there will be a lot of people who are short the market this morning from yesterday, the closing bell yesterday, excuse me, I'm just going to have some tea, and could potentially get squeezed out fairly close to the opening bell. So we just opened there, and we're opening up fairly close to where the market was trading. Popped up just a little bit, and I do think we will continue to see buyers come through. So I'm just going to widen this market out a little bit and probably put an order in just above the market. So I'm already long. Still some buying coming through, so I'm just going to put a sell order in here, probably a little bit low. I'm going to put a sell order in there at 33,961. I'm not going to continue watching it. I'd rather get back to looking at the trades that I've had from today and through the remainder of the week. That will trigger if we move up to that level currently, and we might just trigger now. So we've triggered, that trade's triggered. We're continuing to rally to the upside. I'm effectively flat the Dow at this particular point. If we, I might actually take the opportunity. We'll see what happens for the next couple of minutes. But I might look to, if we do pop up that little bit higher and get above the buy order, I might look to close that down. But at the moment we're just hovering around 339772, or just about those sort of levels. Okay, I think we'll leave that. We'll leave that to trade for a little bit, and we'll come back to it in a few minutes and just see how that's going. Reasonably happy to be short those levels for the next couple of minutes, and maybe just put a TP in there in case we go down and trigger those levels. Won't be looking for anything too aggressive. 28, 30 pips will do me nicely. So that's in there now. And let's just have a look at the trading for this week. So those are the numbers so far. So I've just put that extra Dow trade on where I'm short Dow. So that's the trading day. You can see again, you know, it's not too difficult to work out where the over trading was. The over trading came in yesterday. The 4 trades that we see at the top there on Friday are also from Thursday. So that kind of further shows the extent of the over trading. Only one losing trade up to about lunchtime yesterday. That was the DAX trade that we saw on Wednesday. As I said, by lunchtime on Thursday yesterday, the profit was fairly close to 1,500 pips. Definitely moving closer to 2,000 pips on the trading day than moving in the other direction. And then 2 things really happened. Number one, got caught on a squeeze in gold. I was short gold, and gold was rallying aggressively and rallying with pace from time to time through the morning. Gold had been working so well for me up until that point. I think during this session last week we spoke about gold potentially moving down from 1750 to 1720. It went down to 1722 yesterday, and then had a really significant move to the upside. Got caught short on gold, a couple of trades. As gold moved higher, I stopped myself out on a couple of occasions. I think the Dow trade has just closed, so the short Dow trade that we had there is now closed. I can give you the levels that we traded at. So we sold at 961 and bought back at 922. So 39 pips on that live trade during the live session. So I just had the 2 trades that are currently open. But the gold move caught me unawares. There were opportunities to take profit earlier in the day, and on a couple of the trades that I stopped out and then re-entered, had similar misfortune with those trades. So you've got a couple of gold trades there closing out for an excess of 100 pips of a stop. Still have one of those trades open. And then the second thing that happened was, and I mentioned many times around mid-afternoon, that I was stopping trading for the day, but I expected to see the month and quarter end rally and positioned myself slightly for that. The market started falling continued to buy on dips, and unfortunately it just did not work out. Late last night, market was trading around 33,750. I had 3 positions left open, one of which I've closed out at a loss today, the second one I've closed out at break even, and the third one is still open. And based on the lack of a rally, the fact that we finished close to the low, the fact also that I woke up very early this morning and saw that Dow futures were trading at 33,800, I thought the damage was limited and that we would see a move back to the upside. What I didn't foresee is that we would go down to 33,400 before we took that move back to the upside. So just to protect on the downside, I put a wide stop in at 33,350, and I've moved that steadily higher during the course of the day. I have to be completely honest and regard myself as a wizard. No, that's not true. I regard myself as completely fortunate and lucky with the trading recovery that I've made today. Should not have got into that situation yesterday. Shouldn't have got too caught out by the short squeeze or by the lack of a rally in the Dow. And I think, from an emotional perspective, from a psychological perspective, again got into a situation where I was trading quite angry, which is not a good place to be, and not angry with the markets, but angry with myself in the way that I'd reacted to some of that trading, and so it was important to get that back under control today. I think there's been probably 12 trades today, all of them have been profitable, so trying to segregate the week out, Monday, Tuesday, Wednesday were fantastic, Friday was fantastic, Thursday was a complete disgrace, and lessons need to be learned from that, and need to make sure that the structure, the discipline that I showed on the other 4 days extends out to the 5 days, because what happened yesterday wasn't acceptable. Don't want to repeat it, and I want to get back to a situation where the maximum number of trades that I'm doing on a daily basis is somewhere between that 10 and 12 bracket. That is the key area where the profits are returned, and not to get caught up into these bigger moves. In terms of the number of stops yesterday, there was 5. There's far too many. But the number of successful trades again far exceeds the unsuccessful trades. So managing your risk, or what that statement means to me is, or resounds, that managing your risk is as important as trading well. Unfortunately, I didn't do that yesterday, and I will need to address that over the coming days. Very, very thankfully, I'm going to end the week with a profit. It's going to be a very decent profit, but it could have been very, very different, and I, for one, would never ignore the fact that I have been very lucky throughout the course of today. I think the trading was exceptional, Monday through Wednesday, Monday through Thursday lunchtime. Very, very poor for a 24-hour, well, not even a 24-hour period, a 12-hour period from yesterday lunchtime, and then thankfully I've been able to right the ship over the course of today. Thank you very much for joining me. I've probably spoken too much today. There are a few questions pending there. I will get back to you by email. If you do have any questions, any concerns, any issues, anything you'd like me to explain with a bit more detail, please email me or Sam, Nick or Sam at bullandbearcap.com, and I will get back to you over the course of the weekend. Thank you very much for joining me.